Hey everyone, it is Julie here with TipRanks. Today I have a bit of a different style of video for you as I wanted to take a chance to discuss with you the current market climate and share some perspectives that I find helpful during these times, and hopefully you will too. As the month of September comes to an end, it's hard to ignore all of the negative headlines out there regarding the stock market and economy as a whole. We are ending one of the worst months in years, inside one of the worst quarters, and a pretty miserable year all around. As September faces steep losses, all three major indexes are on pace for their worst first 9 months of a calendar year since 2002. 2022 has been an extremely difficult year as we're battling some of the highest inflation in decades, ongoing global supply chains, plus political uncertainties regarding Russia and the Ukraine. In fact, the S&P 500 has officially erased all gains that it's had since December of 2020. The S&P 500 index is currently just above 3,600, and if we noticed, we are dangerously close to our 52-week low. Over the past 6 months, the S&P 500 is down over 19%, and year-to-date returns are a negative 24%. This rings true for the Dow Jones Industrial Average as well, which is down 20% year-to-date, and the tech-heavy Nasdaq, which is down 32% year-to-date and 24% this last 6 months. Investors have been dealing with very unusual and extreme market conditions since 2020. Of course, in March of 2020, the global economy came to a screeching halt as the world shut down for COVID. We saw steep declines during that period, but we also saw a huge flock of retail investors come to the market as everyone was at home and able to pay a lot more attention to such things. But it wasn't too long after everything crashed in March of 2020 that it started to rebound. We saw insane gains the following year. With reopening hype, there was a huge influx of SPAC companies, which eventually became a bubble of new companies flooding the market, and retail investors jumping in and able to find easy gains everywhere. So yes, 2022 has been a hard pill to swallow for a lot of investors as we face so many headwinds in the market and a lot of uncertainty moving forward. And I know this all sounds like a lot of doom and gloom, but I'm getting to my point here. And that is a piece of advice that I saw recently that really stuck with me. It said, when in doubt, zoom out. Now let me tell you what I think this means. When you're looking at a certain scenario, it can be really helpful to take a step back and look at the situation from a wider lens. So we're going to do that with the S&P 500 historical chart. When we look at a historical chart of the S&P 500, we of course can see this big decline around the pandemic. That was a big drop from up above 3,700 down to 2,900. Now, if we back out to the last 5 years, we can see another dramatic decline here in 2020 to 2022, going from over 5,000 back down to around 3,600. It's pretty daunting. But as we start to back up, we can see more of these trends of recovery. Going back to 10 years, it has been a fairly steady climb, but if we go a bit further, we see the crash back in 2008. If we zoom into that period, that steep decline looks like a pretty similar chart. But of course, we know it was followed by a lot of steady recovery. Backing out even further to say 30 years, we see other declines in the history. And of course, looking at all years, all of these gray marks are the recessions we've had in the past, and of course, we've always seen recovery afterwards. We can also look at this in a different format with the annual performance rates. Looking at this chart as well, you can see the annual percent changes, and of course, we're big in the red here. But as we scroll down through the historical annual returns, we can see all these periods of red are always followed by periods of green. Here in 2008, we were down 38% on the S&P 500, followed by a couple years of growth. Scrolling back further, we had a few rough years here with the dot-com bubble, again followed by several years of green. And all throughout history, we can see that overall, the red is closely followed by years of growth. So it is crucial to remember that although while we are in these downturns, it can be extremely stressful and frustrating, that the market has gone through these before and has always recovered. Now, of course, no one has a crystal ball as to when we will actually hit the bottom and things will turn around, but it is important to remember that time in the market is better than trying to time the market. Big blue chip companies that were always considered pretty stable growth stocks have very similar year-to-date charts than some of those riskier, newer companies as well. So if you're a long-term investor that picked up quality stocks with intentions to hold them for years to come, don't panic and fret because the overall market is down, including your investments. As much as investing is fundamentals and technicals and numbers, it's hard not to let your emotions come into play when we're talking about our hard-earned money. It's not fun to see it go into the red, but try to take a step back and look at the big picture. Popular advice during these times is always to buy the dip, and of course that is great if you're wanting to scoop up some stocks on sale. But also know that there is no shame on sitting on the sidelines patiently and waiting for things to turn around. You don't actually lose any money until you sell out of your investments. I personally have a setup investment plan where I contribute so many dollars every single month into the same well-diversified ETF. And during times like these, I leave that in place. So I'm continuously purchasing or dollar cost averaging throughout the downturns and the upturns. The most important thing is to understand your own investment plan. What are your goals? What is your risk tolerance? And what is your time frame? If you are here for the long term, then don't let some of these market cycles dissuade you. Just stay patient and keep your eyes on that bigger picture. All of this is to say that we are all going through the same market together. It can be very dissuading trying to find new investment ideas and opportunities when everything seems to be going down, but just stay focused and stick to plan. So hopefully you found this slightly helpful or maybe gave you a little bit of hope for the future. Let me know your thoughts in the comments, how you're surviving this big downturn and what your plans are for your future investments. I always love hearing from you guys. Thank you so much for watching. I hope you have a great weekend and I'll see you back here next time.